Hello, folks. How can I provide you with some value on the precious metals markets this week? That was the question I was asking myself this morning, and I'm kind of a chart guy, and so I'm looking at some charts, and there's silver at 400, there's silver at 600, and that's kind of cool and everything. But I think for what's going on in the markets currently, it's of more value to think about the silver markets. That's what I'm going to focus on in this video, and the structure of the silver market at this point and at a global level, so not just in the West, but the East as well, because that's part of the big picture. Before I do that, I want to touch on a few things. This was from last week. So I talked about, in my opinion, last video I was talking about what are the risks? Here we are, silver's at 102, 103, depends on whether you're watching spot or futures. Anyway, we got $100 silver at this point. Gold's knocking on the door at 5,000. It's at 49.50 or plus, something like that. And so anyway, what are the risks facing us as precious metals investors today and going forward? In my opinion, there's only one. Literally. I mean, there are no investments that are risk-free, folks. If anybody ever tries to tell you that they have a risk-free investment, grab up all your little pennies and tuck them back into your pocket or your purse and run in the other direction, because there are no risk-free investments. So anyway, but unique, in my opinion, silver at this point, there's only one risk, and that's that the CME, the COMEX, will continue to hike margin rates. And we probably ought to just assume that they're going to. And so anyway, at this point, we're at 3 and watching. I get their alerts, and so if they hiked rates today, supposedly I'd get an email tonight and would be aware of it. So, but anyway, I'm paying particular attention to this. I noticed that some analysts right now, they're only reporting 2 hikes. And I suspect that they are overlooking the fact that when the CME made this change from fixed price contracts margins, fixed price per futures contract for margin requirements, and they switched to percentages, some people are overlooking the fact that margins increased. And so in my mind, this was the third, this pricing change. That was the third increase in margin rates. I found some data, and I haven't personally looked into this aspect, but I did see something this week that makes me think that on the Shanghai Futures Exchange, and so this is the precious metals futures markets in China, the SFE, in order to sell a contract short, paper selling that's the phrase that I use, is basically, I ain't got any silver, but I want to sell some short, which of course in the West on the COMEX and the LBMA, you can do that if you got enough margin. You can sell paper silver all day long. I think that on the Shanghai Futures Exchange, they are requiring, it's basically zero margin. So yeah, you can go sell a contract of paper silver, but you got to put up the full value of the contract. There, i.e., zero margin and zero leverage. And so the point is, and this was what the author, the article that I saw, he was suggesting that this margin treatment on the SFE, essentially no margin, makes it such that selling a contract of paper silver is equivalent to buying that much silver, because you're forced to put up the full value of the contract. And so anyway, I haven't thought through the details of that and wrapped my mind around it. But anyway, I get the impression that they aren't playing the paper silver games on the Shanghai markets that we do here in the West. See Friday action on the money fleeing the mining stocks. Well, let's go look. So there's Hecla, just a whole run of, Hecla's been on a run this week. Wheaton, did big gap up and then kind of sideways action, and then closed out Friday with another gap up. Pan American, big day. G-Roy was a big disappointment this week. They announced earnings. There were at least two things in the earnings that analysts didn't like. One of the income streams that G-Roy has in their portfolio had some problems at their mine. And so I guess investors focused in on that, and then one of the analysts flipped from buy to hold. And so anyway, clearly G-Roy, after their earnings, did not participate in this rally, and again, that's disappointing. I'm not concerned. I haven't sold any of my G-Roy. My thinking is, this is just a stumble, and largely it's not about G-Roy. It's about people's understanding of the royalty and streaming model. I mean, this is one of the. It's funny, the reason the market is punishing G-Roy is exactly the reason that the royalty streaming model is so ideal. This is one income stream. G-Roy's got a whole portfolio full of income streams, and then an additional portfolio of income streams that will come online in the future. And that's exactly what Wheaton has done. Same business model, folks. Exactly the same business model. It's just, there's a company been doing it for 20 years. This company's been at it for 6 or 7, something like that. So anyway, disappointing on G-Roy, but clearly we can see money is not leaving the mining stocks. Just, it ain't happening, folks. And as I pointed out in the last video, in my opinion, one of the things that's going on right now, the mining stock sector as a whole is outperforming the broad mining stock sector. And so money is flowing into the mining stock sector regardless of what any individual stock might do, like G-Roy getting whacked, getting whacked by investors. Demand for silver and gold, physical silver and gold decreasing. Yeah, and I pointed out that could happen. I don't think it's likely. I was at a local coin shop yesterday and hung out there for a while. Just kind of, I got an affinity for the precious metals, and so anyway, I enjoy spending time in coin shops. And so I did that yesterday, and it was an interesting experience. What I saw was more buying than selling. And actually, for the first time ever, I showed up and there was a line. There was a line outside the door. I thought that the shop had opened late. I was there at opening time, and there's a line. And I'm like, heck, why? What's going on? Somebody's sick or whatever. They didn't open the shop on time. It's like, no, that's a line of people waiting to get in the door. And so anyway, spent time at the local coin shop. Couldn't tell, it wasn't obvious to me. I chatted with some people in line, overheard some conversations. At least one person was swapping silver for gold, which that's a strategy that some people are advocating right now. And actually, like Franklin Sanders, His target is 32, 1 to 32. That's his target for swapping silver for gold, is at the 32 to 1 gold to silver ratio. We're at 10 minutes. So local coin shop. Oh, and then so anyway, I'm just kind of looking at, okay, what have I seen the 45 minutes to an hour that I spent there? What did I see? And, numerous people standing in line doing their transactions. I was thinking about it this morning, and what I realized that those people weren't selling. Or if they were selling, they weren't selling much, because there wasn't anybody standing there with a cardboard box or a backpack or silver is bulky and heavy. A couple of 100-ounce bars of silver is 30, 40 pounds. And so none of the people that I saw at the shop yesterday were selling any amount of silver that's of worth note. Could have been selling gold. I mean, that's a possibility. You put a lot of gold in your pockets and it's not visible, but they weren't selling silver. And so anyway, that makes me suspect that there is more buying going on than selling. One of the things that the shopkeeper told me is that what I saw yesterday morning is what they've been dealing with for 2 months now, is pretty much a steady stream of people throughout the day. And I forgot to ask him whether it was buying or selling, but steady traffic is what they're seeing. I'm at 12 minutes. I'm going to wrap up here, and I'll continue in part 2, folks.